So far, Bitcoin has moved exactly as I described in my briefings. Right now, the biggest concern is the overbought state of the AI sector. The Nasdaq has soared recently, but when huge capital floods in short term, the market gets swept up in profit taking, which can lead to a downturn. There's also some unusual activity in Nasdaq options. A massive volume of put options has come in for the ones expiring on April 30th. It's a bet on a decline by the end of April, which could mean they know something or it's just a simple hedge. Since this could impact Bitcoin, staying on the sidelines for now is the way to protect your precious capital. Bitcoin's liquidity also lacks any zones that could be called major. As the previously strong liquidity at the 75k level cleared out, the market lost its direction. I believe further gains will be difficult because, with the zones that could drive prices up gone, market makers no longer have a reason to move the price. If a large liquidity zone forms at the bottom in this state, the chart could start moving downward. There's no big move yet, but it's important to wait and look for opportunities until a liquidity zone is established. People often get eager to enter here and use strange fractals or indicators, but you must realize that holding cash is also a position. When you can't predict the movement, it's much better to step away from the charts and go do something productive outside. We are traders who bet on high probabilities, not gamblers. Now, that's the current situation, so let's take a look at the Bitcoin cycle. My analysis shows that the crypto winter will end in October, the third quarter of this year, and will enter an uptrend again. I'm sharing this as my main view with Telegram subscribers, and I'm mentioning the cycle to emphasize that it's not yet time to pour big money into crypto. I predicted the peak of the last cycle almost exactly, and I also got the date of the downward reversal quite right. For Bitcoin to rise, a supply of liquidity is essential, and the most fundamental catalyst for releasing liquidity is a rate cut. Unlike last year, Powell's briefing that there might be no rate cuts, or only one or two at most in 2026, is becoming a reality as time passes. Macro indicators came out strong yesterday, but the stance on rate cuts remains conservative. There's nothing to expect regarding interest rates in the first half, so we have to look forward to the second half. I see an opportunity starting in September, and perhaps between September and October, Bitcoin's price will reach a level we'll never see again. Back in 2017, when Bitcoin had just passed $1,000, there were plenty of fake experts analyzing that this was the final peak. In the end, $1,000 turned out to be a life-changing price point. Back then, just like now, we moved past the crypto winter and entered a new phase as we headed into October. Afterward, when COVID hit, there was another crash, but since other assets were affected similarly, it's not something we need to look into too deeply. Anyway, rather than taking major action at the current price level, I suggest you watch the market for a bit and try to catch the movements of the major players. If a significant position opens up, I'll provide a briefing for you. My briefings contain a lot of important information, so I recommend subscribing and always staying up to date with my latest videos. Thank you.